With Bitcoin roaring back above $66,000, it is the ultimate question of this market, how to maximize profits, which will be the topic of today's video. With that said, welcome back to EllioTrades channel. I'm host Krown again today with some good old TA. In fact, this video today is going to be a little bit more theory based. So with that in mind, I do want to encourage you within the comment section below to let us know if you like these sort of videos, if you want to see more like them, or if you other topics covered. And also, if you happen to be so inclined, like the video as well, if you find it valuable. Anyways, with that in mind, let's talk about the topic at hand, something that I think could be spoken about a lot more in markets like this, and that is opportunity cost. First, let me explain what it is. It's an economic term, essentially stating that there is a cost of being in one asset versus another. Now, in this market right here, with Bitcoin doing its thing, and essentially, we have been speaking about this for the past 3 weeks here, preparing for this move and what's to come in over the next 2 to 3 months, of which those videos are still very much relevant and available for viewing at any moment in time. I would imagine that many other altcoins will be following in the party as well. But in the topic of profit maximization, which assets will actually maximize your profit? How do we decide that? Well, in terms of opportunity cost, again, I could be in Bitcoin, which is moving up here, but if I could say be in also Ethereum, which is moving up at a faster rate versus the US dollar as well. So again, both are going up, just Ethereum's going up more. Then as a trader, and I imagine investors think this way as well, but as a trader, I actually look at it as I am taking a loss by being in Bitcoin versus being in Ethereum for that trade plan, essentially. So you're probably thinking, Krown, duh, we want to maximize profit. So how to maximize profit, sir? And well, fair enough. Okay, so this is hopefully the valuable portion of this video. Bring you over here into a very streamlined and easy strategy that I want to present. Of course, I can make this much more complicated and make it more efficacious as well. I go over this kind of stuff on my own channel, which you can check out in the link below. But I wanted to find something, simple and easy to understand here, not because I don't think that you're capable of doing more, just want to make it digestible in like a 10 to 15 minute video. Very simple here. So what am I running? I'm running 3 different moving averages. You can get these on the TradingView public library, and my inputs are a 9 exponential moving average represented by the cyan color, a 55 exponential moving average represented by the green color, and a 21 exponential moving average represented by a yellow color. You don't necessarily need to use this indicator to get these. You could just plop them on from the public library, or you can use this indicator as well, which is just caretaker's moving average crossover levels. Fair enough. Okay. All right. So what are we talking about right here? Well, first things first, I should address this because there's some very let's say, interesting but uninspiring ideas about moving averages in general. Unfortunately, moving averages have become a bit of a meme in a lot of markets because, well, as anything that actually is valuable gets kind of, popularized, people who don't necessarily understand them all that well will use them and use them poorly, and then say all sorts of things that just, in my experience, are not true. I've been using these for, more than 10 years now, and well, it's been rather kind to me. Is it perfect? No. Is any one indicator perfect? Absolutely not. Can we add other things to this to make it significantly more efficacious? Absolutely, yes, we can. But just for today's video, we're going to make it nice and simple. Here is the generalized strategy with it. When there is all lower period moving averages trading above higher period moving averages with positive slopes, look at that as an upwards trending market, and trend is now in motion. So again, that would be the cyan 9 above the yellow 21 above the green 55. Cyan, yellow, green. Lower periods above higher periods. You know this to intuitively be true. And then they also must have a positive slope. Now, if you are actually trying to get the cross itself, you'll want to see essentially price action test into the cross, similar to what you see right here. So you see them all across the upside with the lower periods above the higher periods, and then they all get positive slopes. Bitcoin tests the 9 exponential right here, and upwards and onwards we go. This is just a very easy example. It's not always going to be that beautiful, and you will see bad examples along the way as well, of course. Not perfect. Okay, so now we need to apply this into what we were talking about at the intro of this video. And this market essentially allows you to plot just about any of the altcoins versus Bitcoin, which I do think is a good measurement for like par for the course, essentially. Of course, if you want to denominate in Ethereum or whatever, feel free to do this. This works with any base pair, but I think that Bitcoin's a good one to be using on this. So let's go put it to the test. Let's see, how is AVAX, one of the darlings of the market, doing versus Bitcoin using this sort of a setup? Well, let's go over here. And what do you know? What do we have? We have a bullish cross right here. All major moving averages are chasing price action, and I would be looking at Avalanche as having a better opportunity cost than Bitcoin on this specific time frame. Very key point. Does this work on every time frame? Yes. If you're thinking more long term, I would probably use this on no less than a daily, and in many cases, I'd even go higher than that at a weekly if you are very long term, like months down the road, years down the road, maybe even consider like a monthly if it will populate. But as you can see here on AVAX, we had a couple of great signals on this one. Told you to essentially get ready for AVAX outpacing Bitcoin right here, and told you to potentially think about taking profits or going back into Bitcoin right here. So when you see the 9 and the 21 get negative slopes and the 9 crosses to the downside of the 21, that is when you usually want to de-risk. And when you see all of them cross over the 55 and you essentially get the opposite but equal signal that you got over here, downside one, you very may well want to consider going full into Bitcoin, or perhaps the market is most likely turning down versus the US dollar, maybe even consider just going back in there. That in that case, you'd have to look at Bitcoin and see exactly what's going on, perhaps your friend, as it will be your friend. During choppy periods over here, it's not going to be great, but that is why slope analysis is very important. You can see that once the 9 crosses the downside right, the 21 right here, it's time to take your profits, because you can't be too greedy after a move like this. And well, you can see that it's actually been pretty damn good for this. So the idea is not perfection. The idea is profit. As you'll never be able, in my experience, there's only one person who gets to sell the high, and there's only one person who gets to be able to buy the low. And it's probably not going to be you, especially on both ends simultaneously. The idea is to catch about 50 to 70% of the move. Hey, if I catch 70% of the move, I consider that like, okay, great, absolutely amazing. So let's look at another pair over here and see Solana versus Bitcoin. Which one is the better call right now? Well, while Solana actually is showing a little bit of short-term downside, that's not what we should be talking about here, but you can see that we have the cross setup right here, all major movement averages posturing. So while I would be back here, I don't have a reason to be favoring Bitcoin over Solana, for example, in this next leg of the market. I'd be looking for Solana to outpace Bitcoin, likely, unless if we start to cross some of those to the downside in the fashion that we spoke about earlier. More importantly, allows you to identify these sort of price actions over here. Across the upside, they all get positive slope, tests into it perfectly, boom, up we go, and a phenomenal move. And that is essentially telling you Solana is the better one to be in versus Bitcoin. Again, I want to be very adamant about this. When you do see the bullish crossover here, with all of them getting the lower periods above the higher periods, all have positive slopes, you'll want to see price action test into, at the very minimum, the 9, preferably even the 21 and 55. The closer it gets to that, typically the better of a setup it will be. This example right here is about picture perfect as you're going to get. So fair enough. And of course, right here, we don't get an actual full downside signal, just de-risking signals along the way. So I would still favor Solana over Bitcoin. Worth there. Okay, let's look at some maybe less interesting examples. We'll call it that. Yeah. And let's look at Litecoin Bitcoin over here, of which I think this one will be better seen on a weekly, which yes, yeah, that's perfect. You can see that this strategy has told you to be in Bitcoin over Litecoin and not look back ever since essentially July of a couple years ago in 2019. Actually, this one's been pretty damn good at keeping you out of the troubly parts of this one. Of course, daily is going to be a little bit more floaty and flighty here. And to be fair, if I'm doing like a general analysis on Litecoin Bitcoin pairing, look, this is a bit of a pump and dump chart here, but this typically has been the area that you do see this one pump from. So, you play with fire on something like that, in my opinion. But hey, to each their own, right? I think this one probably is going to put in a bounce relatively soon for what it's worth. Anyways, let's go look at another one. Highly esteemed, very highly advanced technology here with Doggy Bitcoin. And what do we have here on the daily? Essentially tells you to, wow, this one actually keeps you along the whole way through. Tells you that Doggy is going to outpace Bitcoin starting in January 2021 when it went on that phenomenal run. All the way up, boom, all the way up, boom, very constructive all the way through. And by the way, we never, it did de-risk a few times in there, but again, it's all about capital preservation and profit realization in this. And then tells you to not favor the Doggy over Bitcoin in this case. Went all the way starting from about June of 2021. Or sorry, even back on over here, this was your first major warning signal. This over here tells you Bitcoin over Doggy. They're there for a while. So I think this is a good place to leave off this video. Again, this is a very, very basic version of this strategy. I want to, again, invite you to let us know what you think in the comment section below. And also let you know that if you want a more, complicated version of this, or not to say it's complicated, that just makes it sound bad, more bells and whistles on something like this that's going to make it more efficacious, you can check that out on my channel. There's a link in the description below. I believe I might have said that earlier or not, I forget. But more importantly, use this, and make sure that over the next, whatever it ends up being, maybe 3 months, maybe 6 months, maybe even 10 months, as per yesterday's video, I do think market probably at minimum goes till like March, and maybe even as much as September as next year. Maybe a bit generous on that last one right there, but fair enough. During these times when Bitcoin is presumably bullish in general, we do want to be seeing would we have made more money being in some asset or not. And with that said, I'll leave you off right there. Of course, forgot to mention the old shill right there. Got the Bybit link in the description below. Please understand, look, if you're new to trading, if this was like all completely new to you, or you're new to leverage trading, don't leverage trade. It's a really bad idea. Probably don't even trade at all. But if you are looking to learn, first reference someone on YouTube with free content, of which the channel has plenty of free playlists for that purpose. And then get some experience using a testnet or a paper account. Not put real finances at risk in the learning process. There's absolutely zero reason to do that. And in my experience, that's the biggest impediment for most people actually learning this as a skill. So with that said, I think that's a good place for me to sign off. I'll see you in the next one, and take care.